The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the reach, dear friends? Nope, it's not working right now for some unknown reason. Let's try this. That's it? No?
This is Houston. Say again, please.
Houston, we have a problem.
Yeah, we do. I couldn't get my little thing to go off today. So let's try it again. Oh, there it is.
The following takes place between 2 p.m. and 3 p.m.
It's working now. So we're up 19, 20 points, kind of bouncing around that level at 27.35. As I said, I wasn't looking for the highs to blow out here, just for us to go up and kind of play around this 27.50 level through next week. We've got the first leg here today. I suspect we come back Monday and see a little more of it. Tuesday, half a day, Wednesday off, Thursday, Friday. I just don't see anything going on. And again, we've got kind of an oversold condition. That light volume through next week could get a lot of that taken care of. If you're bullish or bearish, I suspect that we don't have the signal until we come back that Monday from next week. At this point, though, I suspect we're going to see some stocks start squeezing as there are a handful of these stocks that have massive short sale numbers in them. And we'll see. Anyway, I've added a few positions just because my sector oscillators actually told me that it looked like it was a fairly good time to get in. I know a lot of people are afraid. I love to buy when everybody's afraid and telling me the market's going down. I like to sell and short when everybody tells me the market can only go higher. Sometimes my timing's not perfect or not even good. But generally, just doing the opposite of the major part of the crowd is the right thing to do. So we've got, as I said, 20 points higher on the S&P. Dow's up to 28. The NASDAQ's up 42. We should start looking from now on through the rest of the week for lighter volumes. We're back to traditional Friday volume kind of profile. If this is right, let me just make sure. Yeah, 3.7 billion shares in the NYSE consolidated tape. Now, if we just kind of bounce around here, 5 points up, 5 points down through all next week, that'll do a lot to getting both an oversold and underbought condition taken care of. And a lot can happen in a market that goes sideways, i.e., your expectations probably need to change, but we'll keep an eye on it. I don't see anything that says that on Thursday we go to actually delta neutral day on the market. What is it? Okay, so we come back 1, 2, 3. Is that right? Yeah, 1, 2, 3. So that Wednesday, the 11th, is the day we go delta neutral. And that's when we're probably going to get a fairly good idea. But if the market has not been able to implode by then, probably going to see slightly higher prices into that July 20th level. Now, I am going to be the first one to suggest that I have zero idea that next Friday to the Monday after it, we could see a big move higher or lower. When we come back from that week, I do suspect we're going to have either a lot of juice in the market or there's going to be a lot of people saying, hey, this is the end. The asteroid's coming. We got to make that movie from the 90s again, the Michael Bay movie. It's all over. Asteroid's going to kill everybody. Well, I'm not a believer in that. Especially we had some conversations in the den today about trade, and I probably read the best book about trade over history. It's called Rationally Optimistic, and if you find it, it's well worth a read. It goes back thousands of years to show exactly what everybody's talking about now. All the jobs will be lost to robots. There won't be anything but robots. Robots, we're all going to die. Robots are just going to kill us. I mean, there's almost an exact parallel with the Luddites in 18th century England, who all was sure that the looms would destroy the textile business. And it did for a little while. But guess what? Everybody's level of life, standard of living, just continues to go higher after every time someone says the end of the world's happening. I just love that book because it goes through each time and how everybody and what they said and how it wasn't true. But it also says that every time we've eventually had trust in trade, whether it be from nations or from individuals, that the economy's just gotten better and better and better. So I am rationally optimistic. Not going to sit here and cry. I know that the people on the cable news channels are more than able to shake their fist at the sky and say the sky is going to fall. That's their business in selling the end of the world. But as a wise man once told me, if you bet on the end of the world, it'll only happen you'll only be right once, and there won't be anybody on the other side to collect the money. So just know that things go higher and things go lower. Don't get too trapped in the higher or lower. I do want to thank the emails I got today about looking at the market going a little higher and finding a bottom the last couple of days. As I said in the newsletters, I have bought a couple of positions. Nothing that I'm going to retire on in the last day or two. But I think several of them long-term have a good ability, especially in the Tech Insider, to make some big money all the way through the fall. So feeling rationally optimistic today. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And of course, you can always put a message in the den. When we come back, we'll talk about a little bit of tech history today. I'll be in the in Tom's show. And at 3:30, we're going to talk more about 5G. I had a lot of people email me, so we're going to talk more about that particular technology and why it should be evolutionary and revolutionary, and what you should look forward to it after we talked about it last week. When we come back, we'll be talking about what happened on this day in 2007.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
How hot is it? I was going to do the Johnny Carson joke. I will avoid it. So what do we have going on today? Well, interesting day, but more interesting to me. Where's it gone? Where's that at? Where is it? Oh, there it is. Okay. Is the history on this day.
Then it's all just a little bit of history repeating.
On this day in 2007, nearly 6 months after it was introduced, Apple's highly anticipated iPhone goes on sale. Generally downplayed by the old word technology. Should be world technology. Pundits, after its introduction, the iPhone was greeted by long lines of buyers around the country on that first day, quickly becoming an overnight phenomenon, and 1 million phones were sold in 74 days. Now we're talking about millions and millions of phones every quarter. And the question of whether or not we've hit a peak smartphone business, which I think you can make kind of a certain argument about upgrades. That's why we're going to be talking about that today with Tom O'Brien at 3:30. Just what is 5G and what is it going to change and how is it going to change things, the frequencies, the implications of it, and the fact that it's starting to roll out now. So be interesting. But on this day in 2007, the iPhone fanboys were going bonkers in lines, although I'll never do that. Everybody knew it. Isn't that interesting? Anyway, we'll talk about it then. Let's start talking about some of the other things going on in the market, which is already in progress almost over all of everything. In fact, let's take a look at some of the bigger ones. I do have an email that I need to get to, so why don't we get to that? This is Dan is asking about my thoughts on, what was it, Vail. I've seen this stock for a while. It actually looked fairly good the last time I looked at it. It never quite made it back down to this low, which I would have liked to seen. I think you still have the opportunity, and that's the $11.93 low from March 28th. Doesn't look bad, but anytime energy on my power law vector indicator increases on the way down, I am more willing to wait for a consolidation and retest of the low. I do like the fact that volume was lower on the 25th that we got into that candle of March 28th. But generally, anytime you get more energy on the way down, the most I hope for is a retest on lighter volume. The initial bounce doesn't seem to always go that far and be worth the risk and reward. So I'm still thinking that we have that available. Okay. Okay, that's from yesterday. That's from yesterday. That's from yesterday. Okay, we're back from tomorrow, which we had on the phone yesterday. Thanks again for airing my question. I did well with the trade. Closed my C July 20 calls yesterday for plus 30%. Then in the morning closed the JPM July 20th calls for about 20%. Took a small position late yesterday on the June 29th. I'm watching the price action get back into JPM and see. I'm sure you're probably going to talk about it today's show. But that list of tech companies that will have China investment restrictions from Steve Mnuchin will be released after the bell. I'm looking at short-term trades in tech. I'm thinking about entering small position in Twitter calls. So the question is, what's going to happen? Because people in China can't buy our companies. Well, I think, of course, it means that you've got any kind of buyout premiums probably go away a little bit. But we already know, we talked about earlier in the week, Micron getting all its intellectual technology stolen. But yeah, not only the 5G is having a little bit of a trade war on who's going to control how the phones work going forward. But we have kind of a little bit of the same thing going on in other parts of technology too. There is a definite path that China has taken, and that is to dominate the chip business, both with Intel and others. And the question is, are we going to give away our seed corn for the things going on in the future? Or are we just going to take the quick bucks and walk away? And of course, if you own the company, you'd love to take the quick bucks and buy yet another giant 300-foot yacht that you can ski behind. But in the reality, I think we've got to start figuring out that we are different countries and in competition with each other. And that if we appease all these issues, that we're probably just waiting for a bigger problem and maybe even wars to start over. We need to handle these things when they're small, not wait until they become large. But from China looking to take over Taiwan and invade it, to Russia already pushing into the Crimea, we have aggressive actor states. And I think we've kind of whistled past the graveyards on these and acted like nothing is going to happen. That didn't work out so well for everybody in World War II, as they just kind of acted like it didn't happen, waved papers around and said peace in our time, only to see millions and millions and millions die, even in just the next year. So that'll be it. But we'll keep an eye on what's going on. Okay. Still up, I think it's still up 19. Just update this just to make sure. Yeah, not a whole lot changing here. Okay, just looking here, seeing what's going on. Okay, looking at a few. I did want to bring up this chart also. I wanted to put it in the newsletter, but this thing is so violent that AVLR that I just haven't been able to do it because it's up $2 and down $2 in the time it takes anything to come out. It's actually looked pretty good. We've been talking about this stock for the last couple of weeks. Huge move off the low yesterday at 52.55. The high today at 49.79. Actually, it says 50.47. Huh, I wonder which one's right. Anyway, trading at 49.19 is the last tick I show. Let's update this once more time just to make sure that nothing's happened. Oh, it has $50.20, so it just ran up again. Again, this is if you're looking for an intraday trader, this one seems to be a lot. The one thing that I dislike today, of course, is this has like no volume. So I have a feeling a lot of people shorted this stock, and this is probably the one to own for the big squeeze today. We'll be back after this short time out. We'll look at a lot more charts and answer your email as quickly as we can.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We had a question in the den, and if you want any of these links, you can just email me. But if you're ever wondering why everything's down, generally there's a couple of sites that have what is known as the Internet Weather Report. They just ping various major centers, and those centers, the ping time can tell you a lot about what's going on. But we've got some fairly decent attacks. It started off in Texas. It's now moved its way to California. And it doesn't sound like a lot, but 3 or 4% of all the traffic right now is some nitwit who's trying to cause problems. Maybe it's the Russians. Maybe it's the people that say it's the Russians. Maybe it's actually somebody from Poughkeepsie. Don't know. But we've got a lot of people. It looks like a denial of service attack on Dallas, and then it's gone to California. That ripples through the rest of the country. It's not so bad here. Well, it's a little bit worse in Florida than some others out here, but like in Georgia and Ontario, Canada, and Ohio, Pennsylvania, not as bad as it is in the rest of the country. So depends on where these attacks are actually occurring, but certainly right now, California and Texas getting the brunt of it. So, well, not a whole lot to say other than one more denial of service attack in the market. So we're still up 19 points in the S&P cash, if this is correct. Yeah, still correct. So, what are you going to do with that? I don't know if there's a whole lot you can do. It just, these guys kind of come and go and are problematic. Let's go ahead and start looking at how some of the stocks reacted off the lows of the last couple of days. Huge oversold levels. This looks to me like Microsoft's going to go back up to 100. We got to have lighter volume, but again, tomorrow we're going to have lighter, or excuse me, Monday we're going to have lighter volume again. So it's not going to be uncommon just to see these markets kind of go sideways for a little while and burn off some of the moves. In FLX, didn't have a chance to look at these big stocks so much today. Okay. Was wondering how much Netflix would be hurt by having a movie on it that qualifies as kiddie porn. Doesn't seem like there's that much yet for it today. I guess because it's only one movie, probably everybody's not going to say much. If it happens again, my guess is that they will find some people headed to the pokey on this. Up a little bit, not much volume. It's kind of going to go sideways out here, I suspect, for the week. Let's take a quick look at Apple. A little higher today, not much volume, but again, you had the kind of the move down to 180.73 on the 25th. You kind of just moved higher, a little gap higher today, but not much volume. Again, you got about 1 day to get anything done. Volume's going to knock off probably somewhere around 2 p.m. on Monday. You're going to have a half day on Tuesday when not much happens. You got no earnings going on. And the question is, who's going to be the first to blink, shorts or longs? And I think you're going to have some fairly bad news to get the longs to blink. Just no news is probably going to be enough to find a lot of people on the wrong side of some trades through next week. And if you have a huge move higher, then maybe that is an opportunity to pull the trigger and go short. If it just kind of mildly goes higher, then I think you probably don't have any better position to pull the trigger short than you do today, which is not a very good one. Let's see what else we have out here. Okay. Okay, did the market make a new low this week? Will the rally bring the S&P and Dow to new highs? My thought is that we're going to kind of play around here through the in this 2,700 area through the rest of the summer. And as soon as the trade issues are off, I think we run into some of the election issues, but I don't think that they're going to affect the market near what they have for trade issues, at least in the perceptions of traders, and that is where prices are made. They're not made somewhere else. But keeping an eye on that, I think, you know what, you're going to have some stocks vastly outperform a lot of others. But I think on the whole, we're probably in a trading range until we bust it higher. I think that bust will come late in the summer or maybe in September. As I said earlier in the year, yes, I think we get back up into the 2800s. Could we get back to 2600 first? It's certainly a possibility with enough bad news. But I think as soon as that bad news comes in, we're probably going to see some fairly decent earnings going through this fall, and we'll get back on the road to higher prices. They're probably just going to be a lot closer to what a real fair market price for the stocks should be. We got up to those levels and higher just on a lot of air and not a lot of substance. Okay, I've got something else. So that's it. I'm just not. I'm not either saying we're going to heaven or hell. We could do either. I don't think that's probable though. And you know, I think we've got the trade issues kind of priced in now. And the question is, as those go out, do we get the political issues of this fall priced in? As soon as those are priced in, I think we start seeing the move higher into the fall as taxes, especially in the mid and lower cap stocks, really start to shine in their earnings. Okay, more emails to Microsoft. Someone wanted me to look at Oracle again. We talked about that getting hit and coming down to support. It's kind of come back up here a little bit. I still don't see anything new. I checked after I think we had a question from John in Philadelphia about the difference between Oracle and IBM. We'll look at IBM next. I just don't see what Oracle's doing in the near future other than a Me Too presence in cloud servers. So I mean, if there's one that is problematic, I think it's that now. At least IBM is trying to make a business in quantum computers. You did have a higher volume low in IBM though, that June 27th, and that doesn't look good. You also have more energy off that June 12th high. So in the short term, IBM still looks probably the weaker of the two between Oracle and IBM. Just the long-term future, though, if you don't send a ship out, your ship's never going to come in. And that is the problem, I think, with Oracle. At least IBM has a chance, but I think that chance for higher prices probably comes at lower prices in the near future. We'll be back after this.
We'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750 855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And somebody was asking about bias. It's just the last abbreviation in the post made me think that maybe someone had a axe to grind. And I've seen a lot of that. In fact, I can rip apart most news articles and say, okay, there's some propaganda. There's some propaganda. There's some propaganda. You got to really cut through it. We have somebody on the line. Hello? Just heard.
Hello? Yes.
Oh, yeah, we do. Okay, there we have it. Okay, how you doing today? This is Mohammed.
Yes. Hi, Dave. How are you?
Fantastic.
Thanks for taking my call.
Most welcome. What do we want to talk about today?
Yeah, I was wondering if you could take a look at Charles Schwab.
Okay. What are you thinking about this?
Yeah, I actually got into it a couple of days ago at around 52.79.
Okay.
I'm down about $1 on it.
Yep.
I was wondering if you see any bottom forming yesterday or...
No, what was your idea on the trade here? I mean, where was your stop and what were you thinking? Why did you think it was going to bounce?
Yeah, just a short-term, trading, not holding.
Right, but what
more like
either technical signal or a fundamental signal or anything else made you think that this thing was going to bounce?
Yeah, I thought that was maybe a little bit oversold.
Okay.
I
mean, you've got a little bit in here. You gapped up on the 16th of April. You did so on 9 million shares. You went into it yesterday with 6.6 million shares. So you got into that, got a little bit out here. This is not a bad trade. The problem is you got one more gap down here at 49.64. And the question is whether or not you make a low. To me, you've got something here, but you also have the ability to buy this at 94.64 too, with the low. And that to me is a more, important low. In fact, you can go back to 47.94, which is the February 9th low also, that spike.
Okay.
And you had 12 and 14 million shares back in that price range. Those have never been tested. To me, are you going to probably get a bounce through next week? I think you can. Let me put it this way. It's not clear that this is where it's going to bounce. It could bounce at the lower ones. It could bounce here. And that, to me, I just look for a cleaner chart that doesn't have those, right?
Okay.
That are a little more vivid and less ambiguous. Because it could bounce right here. It could go back to the lower ones. My guess, though, is as long as we kind of hold up into the closeout here. I think we're up 18 points now. That you pretty much, you're going to have light volume. That's not going to, generally, that's not going to help anybody that's trying to push the stock down that's short. You probably get a bounce.
Okay.
I just don't see, to me, this thing would probably had to gone to $58 for me to make the trade worth it. And the question is, do you think it was going to go to 58, or where did you think it was going to go?
I was thinking of maybe around like 55, maybe 55, 56 level.
Yeah. So you were hoping to get maybe $3 from a $52 stock, right?
Yes.
Okay. And where was your stop going to be?
I was thinking about actually exiting probably around like 48.
Yeah, see that's the risk reward there. Just seems to me to be a kind of a 1-to-1 then, right?
Yeah.
Maybe $3 up or $4 up and $4 down.
Right.
That's why I would much rather have entered a trade or found another stock.
Okay.
That was back down around, like on this one in the 40, when this thing, if it gets around the 48, 49, 47 level down here,
Right.
and the volume's light, then you know that you only have to maybe take $1 down for $4 or $5 up, right?
Correct.
So that's why I like a cleaner chart than that. Not that it means that it's going up or down, just means that you know much closer when you're wrong or right.
Okay.
So that would be the only thing I'd have to say on it. Overall, the energy is less on the way down from this May 21st high. So it's not like this thing came down like a lot of stocks with more energy. You can get a fairly decent bounce out of it. I just would have liked that. The other thing I like is to see volumes come in half. And like I said, I think that first that first gap up back on the 16th was 9 million shares. So I would have liked to seen something like 4.5 million shares. It was lighter yesterday, but it was still 6.6 million shares. So it could have been just a little lighter, and that would have made it a little better trade. Still a good trade. So I don't want to make you think that I'm saying this is all horrible. It's just that for me, I want to remove the ambiguity of which one of these things is the low I'm trying to test, right? And with 6,000 some odd stocks trading more than 300,000 shares a day, there are a lot of stocks to look at. So on Wall Street, they have a saying called "change the name," and that just means, if it's not clear, why do you have to trade that? Just go on and find something else that was much cleaner. And I think we talked about a few of those yesterday that we were looking at. What was it? Taiwan, was it Taiwan Semiconductor? Here's one that is a good example. Look at Tower Semiconductor, TSEM.
Mm-hmm.
You slam down on May 7th. You got 14.5 million shares. Okay, today we got 235,000 shares. Energy was less on the way down. But if I back out and go back a little bit further, are there any other gaps out here that are anywhere close? And the answer is there's a low at $20.60. But at that point, we're back into maybe $1 down, right? And the next high is 26.39 on the high side. So I'm back to something like 4 or maybe even 5 to 1 on, if I'm wrong, where is it going to go to? And maybe where it's right, if I get the next just a bounce to the last high, not even, not looking at the big picture. To me, that is a better setup out here. And maybe the semis get going again next week or something. And maybe I look at something like this. But I would much rather have one that doesn't have all that kind of noise around the lows. But other than that, it's interesting. I think we're going to have light volumes, so you're probably not going to get blown out on it. If it goes down another 20 cents, I don't think you're going to lose any sleep on it. Just keep an eye on it. But my guess is that maybe it goes up and you get your buck back.
Thank you so much, Dave.
You bet. Thanks for the phone call. We'll be back after this with our last segment of this week.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I had one question come in via the email thingy. Someone said email is just a fad for 50 years. Anyway, nice little bounces around here, around the 2660 area, 2640 area of the XLF. We went a little deeper, but we've been pounding against this February 9th low that had 150 million shares. Got into it with 70 million shares May 3rd. Got into it with a little bit more, 78 million shares. But it wasn't any kind of blowout low. Now you've got the pop higher. And, you know, energy is about the same as on the way up as it was on the way down. Volume is just a little bit more. So you don't have, you know, something that I would jump on the moment. If you bounce a little here, you kind of come back on lighter volume and you get real light volume, which we certainly could get maybe next week or the week after that as we go into the deepest, darkest part of July in the markets. That could set up the kind of low that you would buy in the XLF. I've seen some other stocks that I like a lot better than the financials, but do they look bad? The answer is no. We went through all of them yesterday. Why we talked about why we thought that the low had kind of come in, at least for a little while in the market. I don't see any of that changing as we go through next week. Most of the people probably already in their cars and headed for the Hamptons that work on Wall Street. So going to be a quiet week. I will be gone. Newsletters will continue, but I won't be back until that Tuesday after next week. So you can catch me on Tom's show for the last 30 minutes of the day today. And then I will return to the microphone after that. So when you can, not when you have to. And we'll see you here a week from Tuesday over most of TFNN.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.